The chat is all. So the chat is always noisy. Remember I said we're talking about market structure and we have 3 types of markets: choppy market, ranging market, and trending markets. So now the explanation I'm giving is on choppy markets. So I said choppy market, as the name implies, is a market that has no clear direction, the chart is always noisy, and you can't tell if the market is trending or not. Full stop. Now, write notes. In fact, anytime I say notes, anything I say notes to in the course of our classes, please know is very important. Notes. The best way to trade a choppy market is to completely ignore. Full stop. It's to completely ignore. Stop. If your background is noisy, please mute yourself. Is to completely ignore. Full stop. Are we together? You want to completely ignore a choppy market. Full stop. Now, don't worry, we're still going to go on the chat. We'll see the practical examples of how a choppy market looks. But before then, let's take the notes on the ranging markets also. Now, ranging market has a subheading, right? Ranging markets, as the name implies, are markets that move sideways. Ranging markets, as the name implies, are markets that move sideways, and are caused, this is the main important part now, and are caused as a result. They are caused as a result of equilibrium between the buyers and sellers. Full stop. Between the buyers and the sellers. Full stop. They are caused as a result of equilibrium between the buyers and the sellers. Full stop. Notes. Now, this is the interesting part about it. Notes. You would often see a ranging market at the end of an existing trend. Note, you would often see a ranging market at the end of an existing trend. At the end of an existing trend, to show that the previous trend is losing strength, to show that that trend is losing its strength. Full stop. And therefore, let me know if I'm too fast. Should I still wait or should I proceed? Anyone, let me know if I should proceed.
You can proceed.
Okay, and therefore leads to the beginning of a new trend. Beginning of a new trend. I'm going to recap because of the person that just came back. I'll just do a recap. Full stop. Now, this is number one scenario of a ranging market. You remember I said when I said notes is important. Let me take that again. I said, for the sake of Emeka that just came back, I said we have three types of market, choppy markets. And choppy markets are markets that has no clear direction, right? And there's too much noise on the chart. This kind of choppy market, you don't want to trade it at all. I'll show you a sample on the charts. So we didn't really write anything about the best way to trade that kind of market is to completely ignore. And that's because if you trade that kind of market, your money is just going to be, you just discover that your money is going, you made money in the market right now and you lost it in a choppy market. That would always happen. Now, the number two type of market we said is that is a ranging market. And I said this, a ranging market, as the name implies, is a market that moves sideways. And this is caused as a result of equal strength between buyers and sellers. I now said notes, and this is where it is important. If you don't note this, you wouldn't know how to trade it. Notes, you would often see a ranging market at the end of an existing trend to show that the previous trend is losing strength. After that, Adebayo, what did I call next? To show that its trend is losing strength. After that, what did I say?
So I wrote, it's usually found at the end of a trending market and leads to the beginning of a new trend.
Beginning of a new trend. Now, that's number one scenario. Another scenario where you find a ranging market, write this down. Note, second scenario. And this is important because it will determine how you trade it. Two, a ranging market could also indicate that an existing trend is just taking a breathing space. It's just taking a breathing space. Probably due to the lack of momentum in the market. Comma. Let me take that again. I said a ranging market could also indicate that a trend is just taking a breathing space. You know, when you run, after some time you break. After running, you rest, sorry. So a ranging market could just be that a trend is taking a breathing space or a resting period. And can lead to still the same trend continuation after the breakout. After the breakout, full stop. After the breakout, full stop. After the breakout. After the breakout, full stop. Can I proceed? If you can, I can proceed. Drop a 1 on the chat box. Drop a 1. Okay, good. Now notice, before I tell you another note, now notice what I said. A ranging market can be because the market has been running. You know, when you run, normal, when you've been running for a long time, meaning the market has been trending for a long time. After some time, you get tired, is it not? You want to take a rest. You want to rest more so that you can continue your trip. Good. A ranging market could just be because the market has been trending for a long time, probably with long moves, so it needs to rest. That time is resting, you'll be seeing the market will be moving sideways. It doesn't mean that that trend is over. It means that it's just resting to still continue. So if it was going up, it can be resting and start bouncing between support and resistance in that zone, and then break out to continue the movement. Or the second scenario, you could be ranging because the market is tired of running and wants to change direction. You know, my people will say if you're facing the north and the north is not assisting you, it's high time you face the south, right? Maybe the south will help you out. So it could be because the trend wants to change direction. right? So 2 scenarios. You could see a ranging market at the beginning of a new trend, meaning that that existing trend was over. So the range market occurred at the beginning of a new trend. That's why we say it's the end of an existing trend that also signifies the beginning of a new trend. Or it could just be that that existing trend is just resting to signify continuation. So what we mean is ranging market could be a continuation sign or a reversal sign. If you understand that, put a 7 on the chat box. Put a 7 on the chat box if you understand that. Put a 7 on the chat box if you understand that. Put a 7 on the chat box if you understand that. Okay, great. So, note. Now, anytime I say note, it's important. You need to write that notes down. Note. It is important to note that in a ranging market, it is important to note that in a ranging market, because you don't know who is going to be in control, because you don't know who is going to be in control of the market, you need to pay attention to the boundaries of support and resistance in that trend. You need to pay attention to the boundaries of support and resistance so as not to miss the breakout. It is important to pay attention to the boundaries of support and resistance so as not to miss the breakout. Full stop. Also another note, ranging markets occur about 60 to 65% of the time in the market. Ranging markets occur about 60 to 65% of the time in the market. Full stop. 60 to 65% of the market, full stop. If you notice, I've not told you how you're going to trade a ranging market, right? Unlike the way I told you for a choppy market, that's because that's going to be a separate class on its own. But now let me explain everything we've been saying so that we'll also go on the charts and look for practical examples. Now, I don't know if you've ever opened your charts before and everywhere it's looking so noisy. You're seeing plenty of wicks. You can't tell whether the market is going up or going down. Anytime you cannot tell, it's simple. It's most likely going to be a choppy market. So those kind of markets, you do not want to trade them. You want to ignore. But for a range, right? Now, why it's important to pay attention to a ranging market is this. Remember I said the last point you wrote there, I said, you need to pay attention to the boundaries so that you can know when it's breaking. So, to understand how to trade a ranging market, of course, you need to understand what we call support and resistance very well. So everybody write this down in your notes. It's support. It's support. It's support is any zone. Is any zone. Any zone or area. Any zone or area that prices has gotten to at least twice in the past. Must have happened at least twice in the past. At least twice in the past. At least twice in the past. And buyers pushed the prices up. A support zone is any zone or area where where buyers come into the market and push the prices off. Full stop. It must have happened at least twice in the past. So meaning if it does not happen, if you've not seen it in the past before, it's not a support. It must have happened before. It's just like if I ask every Christian, what happens every December 25? It's Christmas Day, is it not? Now, it has always happened every year. I can say, if I was comparing it to the Forex market, every December 25 is like a support zone, support period. Do you understand? But another thing that is important to note is, you see in the Forex market, you need to first have this at the back of your mind. Nothing is guaranteed, right? Nothing is guaranteed. But what you want when you trade is to have about 2-3 persons saying the same thing. It increases the chance in your favor. So the same thing about it, support. Before you buy, you must have seen that in the past, markets bought around the same zone at least once, twice. It gives you much more guarantee. If I asked everyone, what was the guarantee that when you slept last night, you wake up today? No guarantee, no problem. Don't worry. I know you believe in God. But the point is, there was no guarantee. But the truth is, people still made plans every single day, because every other night they've slept, they've woken up. True or true? Every other time you slept, you've woken up. So you plan for today. Exactly. That's the same thing in the Forex market. There is no guarantee that when the price gets to this support this time around, it will buy. But because every other time it got into this support area, it bought. That's why we buy around support. So if you really want to understand a ranging market, you must understand how to identify a support and a resistance, first off. So now write this down for resistance. If you're still together with me, everywhere is just quiet. If you're still together with me, drop an 8 on that chat box very quickly. Drop an 8. Drop an 8. Don't worry, it's going to get interesting now. We'll go and see practical. I know some of you can't wait to make the money. Good. So now, right, a resistance is any zone. A resistance is any zone or area that price has gotten to. Is any zone or area that price has gotten to at least twice in the past. At least twice in the past. And sellers came in and pushed prices down. Sellers came in and pushed prices down. Full stop. Sellers came in and pushed prices down. Full stop. Please note, or you can write it somewhere. You see, anytime you sell, you want the prices to keep going down. Anytime you're buying, you want the market prices to keep going up. I hope everybody understands that analogy. It's just like you buying a piece of land for 500. If it increases to 600 in a buy trade, you've made money because it increased. That's anytime you buy, we'll say buyers push prices up. But if you sell, your goal is let this thing keep coming down. Let it come down. I don't know. Have you ever asked yourself, why is it that you need markets to come down for you to make profits in a sell? Has anybody ever asked themselves that? You can unmute and ask, or have you ever asked yourself, or you understand why we make profits when we sell, when the market keeps going down? In case you don't understand, let me give you. Okay, somebody wants to say something? Please do. Who wants to say something? Have you ever asked yourself, why do you need the prices to keep going down so that it can be profitable instead of going up? Any idea? I think somebody had an idea. Feel free now. Was it Mr. Bolu that wanted to say something? Okay. If nobody wants to talk, let me say this. Let's say we are in a Christmas period, for instance. If you wanted to be a seller in that market on Christmas Day, your goal is to stock your product when it's still low. Is it not? You go and buy it when it's still low. So that on that Christmas Day, you sell at an high cost. So let's say a fowl you got for 1,500 on Christmas Day, you were selling it for 3,000. If you don't finish selling it on Christmas Day, if you've ever gone to the market a day after Christmas, you see that the prices start going down. Is it not? They will nearly be begging you to come and buy. For people to come and buy. Sellers will be begging people to buy. Is it not? Now, the person who sold on Christmas Day for 3,000 naira made money. But the person, if the next day, the prices go back to 2,000, The people that sold at 2,000, they did not make much money as much as the person who sold at 3,000. In fact, the more that thing keeps going down, the person who sold at 3,000 made more money. True or false? If you agree with me, put a 1 on the chat box. If you agree with me, put a 1 on the chat box. If you agree, put a 1. And if you disagree, you can put an 8. So that's why we say we sell high. If you've ever been in the petrol business, whatever, if you buy today and you sell it today and the things start dropping tomorrow, you make more money than the rest. So whenever you sell, whether you understand or it's complicated, let the market keep going down. Now back to resistance. You know, I said in a range, you need to pay attention to the boundaries. There's a reason why when we're writing, we call this zone. Its support is a zone because the first time he got here, let's say this space was 1. The next time he came into support, probably he got to 1.2. Another time he got to 1.5, right? Another time, 1.9. The point is everywhere around 1 point something was a support area. So anytime markets gets there, I want to buy. You can see some supports where some went deeper than the other. But the most important thing is when we trade a ranging market, I'll tell you how to trade it later. You want to buy around the support area. That's why we call it a zone. Right? It's just like during December time, Harmattan, you know, the season changes. You can't tell which dates the Harmattan will come out in December. But the point is everybody knows around December period, you know, you start preparing for it. That's the same thing about the support. It gives you an history to fall back on. So now let's go to our charts. Everybody go to your MetaTrader. You're going to be sharing screen. Let's go to MetaTrader. Personally, I trade on phone, so I'm going to be sharing my screen on the MetaTrader. I want us to see an example. Oh, sorry, I thought I was sharing already. Now, you know, we started with choppy chart. So I want to look for a scenario where the chart was really, really choppy. There are some pairs I will never trade, no matter how much you dash me. And you know why? Because most times their chart is always choppy. Now, everybody look at this screen where you're seeing it right now. Do you think this market is moving up or down or ranging or what? Or do you think this is a choppy chart? At this point, everybody should respond. You can unmute yourself. Choppy. Okay, Mika said choppy. Who else? Mr. Bolu, choppy. Okay. Adebayo, what about you? Why do you say it's choppy? Why? What did you see that made you say, oh, this chart is choppy?
I feel it is choppy because in terms of peaks and troughs, like it's almost as if it's going up and coming back to where it came from.
Okay.
Going up, coming back to where it's coming from. So there's no clear distinction.
There's no clear direction. Thank you very much. I like that. Another thing, I need now look at the chart again. I need you to notice something else. Apart from no clear direction you saw, what else did you notice? Everybody look, I need somebody else to talk about this now. Is either Mr. Bolu or Adebayo or anyone. What else apart from no clear direction? Just take a look at my screen. You yourself said it's choppy. So what did you notice about the candles? Let me give you an hint. What did you notice about the candles? I'll call names. So, what kind of set is this? All the other sets, everybody is always interactive, I beg. Adebayo has disappeared. Mr. Bolu, tell me, what do you notice? The question is, you all said this chat is choppy, right? Why do you think it's choppy?
Because there's no clear direction, no clear trend.
No clear direction. Apart from that, there are plenty of wicks on this chart. Notice all these candles have wicks. Wicks are those long things. Like no direction, going up, one minute, going down. So if you're trading this kind of market, there's a probability that it will collect your money, because 1 minute is selling, 1 minute is buying, and everywhere is just noisy. So in that kind of case, you don't want to trade that kind of market. Now, let me give you another scenario. Come in. Now, I'm looking for an example of a ranging market. Now, if you're looking for a range, let me give you a trick, because I'm going to give everybody an assignment and you're going to go and mark it out. A range, you would always see it either at the beginning of a new trend or towards the end of a trend, probably when it wants to continue another move or it's rested. So the thing about a range is always having clear boundaries of support and resistance. Now look at my screen. At the top, can everybody see the range at the top? And then you notice that it's always moving sideways. Once it's moving sideways, most likely you have your ranging markets. Can you see? Do you agree with me that where I marked out at the top is actually a range? Yes or no? Do I have people on the score? Do I have people on this call?
Yeah, I agree. Because
Okay.
according to what you explained to us, you said that if a particular point is touched once, twice, or thrice, then you automatically have a range in scope. So
Good.
yes, this is
The
a
first
range.
thing about a range, thank you so much, Mr. Emeka, is it must move sideways. If it's not moving sideways, you first know that you're range. Look at this market. Before you saw that range, you can see it was first moving up, right? It was like it was moving to the upside. Yes or no? Who saw that upside movement to the left? It looked as if the market was moving up. Then all of a sudden, you saw the range. And remember what I told you about the ranging market? Most likely when the market wants to reverse, right? After a long trending move, you might most likely see a range. And after that range, can you see the market continue to move down? Meaning a reversal totally. It was trending up and then started trending down. But before the trending down, you saw the sideways movement. So this is an example of a case where the trend completely reversed, at least on this time frame that I am, H4. Now, I want to give you another scenario where the market was ranging, but was still a continuation. Now look at this part I marked below. Can you see that the market was ranging? But before the range, can you see that before the range, just before the range, the market was moving down? True or true? If you agree with me that this market was trending down, moving down before this last range I marked, this last part you're seeing on your screen, the market was moving down. If you agree with me, put a 7 on the chat box. If you agree that you can see a movement down on the chart before this last range I'm showing, put a 7 on the chat box. Put a 7. Good. Now, in this scenario, look at after the range, what did you see happen? Remember, I told you a range could signify a reversal or still what? A continuation. Even this one, it still did what? It was coming down, right? Ranged, and then the market moved up, pushed up again. This was still a reversal. I'm looking for a scenario where you have a continuation to the direction of the market. So a range, you could see a range where the market is just resting for a brief period of time, and then it starts to move again. Yeah, this is a scenario of a continuation. It was moving down. All of a sudden, it ranged, meaning this point it was resting. And what happened? It later broke to the downside. So how many of you know how to mark charts on your phone? If you don't, put a 9. If you don't, let me teach you how I do it now, because you're going to do it and you're going to send it to me. Put a 9 if you don't. Put a 9. Because the assignment I'm going to give you, you have to mark. Okay, good. Now, what I'm going to do, one of you will volunteer, I'll make you co-host. So you share your screen, I'll guide you. As you're doing it, the other people too will be doing the same thing you're doing. So who wants to go? Someone should volunteer. You're going to share your screen now on your phone. You go to MetaTrader. It's not hard. Who or should I select? Okay, Emeka, let's go. So Emeka, I've made you co-host. Share your screen, please.
No, I need to join on my phone because I was attending this
Okay,
on my
now your
laptop.
phone. Don't worry.
Yeah.
You just be holding your phone and be doing what we are doing here.
Okay.
Who else? Adebayo.
Yeah, I can share.
Good. Okay, please go. Have I made you co-host already, right? Okay, no. Let me make you co-host.
No.
Which of the two should I make? Is it the Daytona or the Adebayo or Daytona? Which one?
The Daytona.
Daytona, okay. All right. So I'll make you co-host on that. You can share your screen. Remember, at this point, start paying attention. We want to go into practical. So what you mark now will determine what you see in the market later. Okay, good. So let's say you're going to, oh, you're set. You've not set your phone. Did I do this in the last class? I always help people set up their chat to be very neat. Okay, your chat is not bad, bro. Let's remove all these things. They won't let you see. Click on that F at the top of the screen. Okay, you only have moving average now. Go back, go back. Do you like the way these lines are, or you want it plain white?
Anyone
My own
works
chat is
for me.
always neat, so please. I like it to be plain neat. Click on that settings. Let me see, scroll down. Is it no? I think chats. Click on chat. Let me see. Click on the chats there. Okay. Period separators off it. Let me see which other one.
Volumes.
No. Leave those ones. I think it's either data window. Let's go back. Let's see how it looks now. Save this after you've done it. Then click on the candlesticks at the bottom. No. I mean on no. Okay, it's still there. Trade level, off that trade levels. Go back, let's see it. Data window, I think data window too. It was my phone like this. I'm so used to the settings. Let me go back. Okay, I think we are fine. We'll work with it. Don't worry. Go back.
Okay.
So let's go. Good. So let's say you're on a particular chart, right? Change this time frame. Now to change the time frame, you tap on the screen. Good. Like it tap now. If you're using an Android, if you tap on your screen, you'll see something that comes out like a circle. You'll see H4, H1. You click, you select. So let's go to H4. Now this is no longer TBH. So all your analysis, the minimum analysis we do is on H4. So we start from daily, not all these 15 minutes. Okay. And let's say you want to pick a wait, make your screen in an horizontal format, not a vertical. Display your screen horizontally. Okay, good. So now keep scrolling until you see something that looks like a sideways market. A sideways, ranging market. We're looking for an example of a range. I remember I told you a range will always occur either at the end or wait, hold on. Don't expect me to tell you when you see a range. Just look at the characteristics. It's moving sideways. So anytime you pass something that looks sideways moving, try and see if you can see a support and a resistance. And how do you know a support and resistance? It's simple. If you see two buys come out of the same zone and then sells above that zone, have you seen one? This one is all
Um,
no, no, no.
this
This one
is
is
not
only
very strong one.
not scroll. So still scroll. Keep going. Hurry up because Emeka too will still do it. Or if you're not seeing it on this pair, go to another pair now.
Is this good?
Good. I've seen one now where you are. So can you mark it out? Now, to mark it out, hold on. Yeah. For some people that don't know, once you tap your screen, now tap your screen, everybody pay attention now. Emeka, you're going to see a symbol. Excuse me.
Sorry.
Tap your screen. Adebayo, good. By the side of your screen, you'll see the symbol sign where the drill, a circle, triangle. That's where you want to pick an horizontal line. So click on that symbol, that icon. Good. You can see, you're seeing add object, horizontal line.
Yeah, I've seen it.
Good. So pick the horizontal line.
Yeah, I'm doing that. I've done that.
Now go back to the chart. Now put it below the buys. That's we want to mark out the support of the range you identified.
Okay.
So you're going to tap your screen and put the line. Good.
Mm-hmm. So we're looking at GBP USD, yes?
Yes, GBP USD. Is that Emeka, right?
Yes, so I'm trying to
follow him. Is it on GBP? Okay, yes, it's on GBP USD. But it could be on any chart for you, any foreign paper, because you have to go to the left. Now, wait, Adebayo, you're too fast now. Now, remember it's a zone, so you can't just put one line. Do you get? You need to put like two. One is going to be like on the body of the candle, or the lowest one, and then the one will go to the wick, the lowest wick. You're going to go and put another line to put it. So it's the area will now be like you marked out a triangle. So go pick another line. Okay, good. Now, once you drop the line, let me show you something again on this line. Look at this, your yellow line, although this is your color. It's not making everything bright on this recording. You might want to change the color of your line. Now, but just before you do that, Emeka, pay attention now, Mr. Bulu. Also, when you pick a line, don't delete anything. Bro, wait now, wait. I know you know it, calm down. Now, when you put a line, as long as you're seeing
I don't know it, I'm just trying to.
As long as you're seeing this black dot at the edge of the edge of your screen on that line, what it means is that line, you've not keyed it into place. So it can shift and be moving. So you need to tap it so that that black dot, but before you tap, hold on. Emeka, are you seeing the black dot on the screen at the edge of those yellow lines it marked out?
Yes, I am.
Good. As long as you two go and pick a line and you're seeing that black dot, you've not keyed in that line. So you need to key it. If not, the zone you mark out, you can come tomorrow, you will not see it again if it's still showing this black dot. So to remove the black dot, to make that line static, tap on that line once until you no longer see that black dot. Just tap on it. So Adebayo, do that, please. Tap on it.
In my own case, my background is black, so that dot is black for me.
Okay, you would now need to do. Are you using an Android phone or iPhone?
It's an iPhone.
I think it's in your lighting of your phone.
Okay. I think I'll switch to dark mode for the day.
Okay, and so remove it from dark mode. Then go back and see if it's still black. I'll now tell you what we do. So, yeah. Oh yeah, good. Now skip the line into place. Now do me a favor, go and change the color of this your line, because I'll be needing you going forward. So yellow will not make the video clear. So tap on it to change the color. I think you know how to do that. I saw you do that. Click on that line. Or press it down. Sorry, this time around you're going to press good. Go to the low. Change that yellow. Change it to blue. Very deep blue. My class, you must like blue. Change it to blue. Don't worry. Later you can go and change to your color when we are done. Now save. Then another thing. Hold on. Okay, I think your line resolution. Okay, good. It's showing. So I wanted you to apply to all time frame. You're always too fast. That way you won't have to be changing every time. click on that apply to all time frame, then click save. So that any other line you go and pick up, it will good. Now, you've only marked out the support. I need you to also mark out the resistance. I hope Mr. Bolu is with us. So mark out the resistance. Great, pick the other one. 2 lines, remember, 2 at least. One, you put it at the lowest, and one at the highest point of that zone. Highest means where the highest we got to. So I think Emeka knows how to place these lines now. Now I want to ask a question, everybody. This particular range, do you think it was a range for a reversal or a continuation? Was it a ranging market for a reversal or a continuation? Everybody answer.
Continuation.
Yeah. Continuation. What about Emeka? What do you think?
Continuation.
Okay, Mr. Bola already said continuation. Good.
The continuation. Yeah.
Good. Why? That's because before the range, we had a downtrend, so it continued. Okay, great. So from our next classes, I'll now tell you how to trade a range market, a ranging market, how we trade it. Or do you want us to proceed? I can proceed though. Now we can learn how to trade it. But what it means is your assignments will be done and your head will not be too full. So do you still want us to proceed? We still have about
Proceed.
proceed, right? You guys are hot. You want to learn everything one day. Okay, good. So,
The money is waiting to be earned.
money is waiting to be earned. Don't worry, when you spend time sharpening your act, you spend little time making the money. Okay, so this is now before I forget, write this down as your assignment. We are now going to go out to how to trade it now. Write this down. Notes. Mark out 5 range and screenshot. Then each of the range, you tell me whether this was for a continuation or it led to a reversal. That's the assignment. So let's now go right down on how to trade a ranging market as a subtopic. How to trade a ranging market. How to trade a ranging market. Okay, thank you for sharing your screen. How to trade a ranging market.
Yes, sir.
Okay, good. 2 ways, right? There are 2 ways to trade a ranging market. Number 1, you can buy the supports of the range. Buy the supports of the range. And selling at the resistance of the range. Full stop. In front of this one, you now write right now. Write this in front. Notes. 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 Because boundaries can be overshot. Like that. Because boundaries can be overshot. You want to buy at the lowest support of the range, or you're selling at the highest resistance of the range. Full stop. Or comma. Comma. In this scenario, let me take that again in case I'm too fast. One of my students is here with me. Notes. You want, what did I say again? Because the boundaries can be overshot. Good. You want to buy at the lowest area of the support and also sell at the highest area of the resistance. First up, that's one way. So in this scenario, if you now buy, I'm explaining now. If you now buy, let's say this is what I mean. Am I sharing my screen? Am I sharing my screen?
Yes, you are.
Okay, good. Now, notice this particular resistance. Resistance is the one at the top where cells come down. There was a resistance here. I didn't even draw this thing. Let me use another scenario so that you would understand the example I'm trying to make. Sometimes you see this in a range. Some will get to the middle and then turn back this way. Now, when you buy or sell, ranging market, if you want to trade this way, right? You don't buy, you don't sell this. This is also a resistance. True or true?
Yes.
This is a resistance. But you can see that this is far from this zone. There was another resistance here, but this was like the highest point. What I've seen one highest point before. I prefer the market to come into this highest point, so I could pick the sell if I want to trade within the range that way. And then, of course, my stop loss will just be a little bit above the range. But this is where the difficulty of this kind of method comes from. You see, sometimes even the range can be overshot. This place you put your stop loss. The next time, market can still get there and then still start dropping from there after hitting your stop loss. So at that point, when you're trading, it's still risky if you trade with this method, right? Now, let's say you now even sold at this resistance. Some people will say, oh, I want to take my profit at this support. Since we expect the market to keep moving from resistance to support, right? If it's a small range, like the one Adebayo marked out on his chart, it's okay to buy from support to sell from resistance to support, buy from support to resistance. But even in that case, you look at where the markets got to before. If it's a small range, I wouldn't just say, oh, because it got this low. When I'm selling from here, I will expect it to get to this low. I'll put my TP here. No, it might never get here. And if your TP was waiting here and the market got here and then reversed, what happened? All the money you've made, in no time you'll lose it. So anytime you're trading within a short range, look for the very first zone. After the market sold from here, trading a ranging market, because you don't know who's going to be a winner. Remember, one of the reasons why we have a ranging market, both buyers and sellers are of equal strength. None of them is strong. You don't know who is going to be the winner at the end of the day. So you want to be careful. This is like you just gambling or taking what you can. If I was selling within this range, once I sold from here, this will be my first TP. I'll look and see if there's any short range within the range in the middle I could exit. Or if I want to go for a lower one, if this was a low before all these other lows, I put my TP here and exit. Maybe I'm going for TP1, TP2, meaning I took the trade twice. I could exit one here because TP1 is more certain than TP2. Do you understand? And in this case, what I'm risking will be very little because my stop loss is just going to be maybe like 20 pips from the height of the range. And then maybe the pips I'm going for is like 50 pips, right? Or this. Now, one way I also note whether it's worth trading is if the profit I'm going to take, anytime I'm trading, if the profit I'm going to take is not going to give me at least twice of what I'm risking, it's not worth trading. So you're going to see range, it's not every range that you're going to trade. Are we together? Are you understanding? If you're understanding, please drop a 9 on the chat box. Please drop a 9 if you're understanding me. So by what you're going to get, you can know whether that range is worth trading. But because this ranging market, you're always going to see 65% of the time. What it means is probably you only see trading market 30% of the time out of the whole market. Go and check all the chart. So if you're waiting for trend, what it means is 60% of the time you've lost money. You're not making money. So you want to learn how to master trading a ranging market. Right? So if you're also buying at the support, you don't want to buy in the middle. In fact, note, one rule you should never do, never buy or sell in the middle of a range. That can be disastrous. If you go and sell here or buy here, it's very dangerous because the range can decide to flip on you. What if that time is when it wants to break out? So number 2 way to trade a range, which is the best, the one I recommend, the one I do, right? So that you won't be caught up within the range, losing money. Number 2 way to trade a range, write it down. Wait for a breakout of the range. Waiting for the breakout of the range. That is, wait for the breakout of the range. That is a break of either the support or the resistance level. Wait for the breakout of the range. Wait for the breakout of the range. That is either the support or the resistance level. Full stop. Now let me explain what I mean by that. Now, when the market is ranging, remember I told you that you don't know who's going to be the winner, is it not? Because it could be the buyers or the seller. What caused the range in the first place is that both buyers and sellers are equally strong. Remember, I told you will nearly see a range market at the end of a trend. Now, when we get to trending market, you understand that trend has to move. So you're always going to see whether we're an uptrend or downtrend, you will see both buyers and sellers. Now, there is a point in the market where both of them will become equally strong. If you're seeing a downtrend, it's because the sellers are the one that's strong. That's why you're seeing a downtrend. If you're seeing an uptrend, it also means the buyers are the ones who are strong. But at the point, both the buyers and sellers will become strong. And that's the point where a range forms. And because both of them are of equal strength, you don't know who's going to be the winner. So this is what I would do. And this is what I always do. I wait for the range market to break out. Now, when there is a break, meaning if it breaks below, most likely this market is going to keep pushing down. So what would I do? I would wait. Will I jump immediately it breaks? No. I'll wait for what we call a retest or a pullback. Now, let's say, imagine buyers and sellers, those are the category of people you find in the market. It's like saying we are having a match. Thank God this is a class of all men between Chelsea and Man U. Now, if one of them scores 1-0, there is no guarantee that the one that scored 1-0 is the winner. True or true? There is no guarantee. You want them to score a second time. At least, even with the second time, it's still not guaranteed. But it increases the odd in your favor that, this team that scored 2 will most likely win. Is it not? So when the market breaks either to the upside or downside, the fact that one broke to the upside does not mean, it's just like Man U. If you score in the home of Chelsea, what happened? Chelsea will most likely be looking for a way to retaliate. So let's say this support zone, let me liken it to football now. Sorry, guys. Pay attention. Excuse me. So this is your resistance zone. Resistance is where we have the Red Devils. And support blue is where we have Chelsea. Now, remember, the people that score in the home of support are actually resistance, right? The sellers. Who are the people you find at the resistance zone? You find the sellers there. So if they come and push prices down and break the support, who are the people who broke the support? Sellers, right? So when they pull down and the market breaks to the downside, they want to keep pushing the market down. But the buyers too, of course, would not allow. They would also try to push the prices back up, right? They are also trying to recover their own fronts. Now, at that point, they're trying to recover. We call it a pullback or a retracement. Don't worry, when we get to trending market, I will explain all of those things very well. Now, if they succeed in pulling back, because these people have now captured this defense, the sellers, if they go here and buyers are unable to push beyond this point again, then what it means is sellers overcame. Therefore, I will now join, knowing that they've scored twice. Meaning, after it broke, buyers pushed it up, meaning you're going to see buy candles that came into the zone. Now, there are candles we'll see here that will now know it's time to sell because sellers overcame. Of course, when we get that on our course outline, you will understand what to look out for. So, but the point is, you don't have to jump in after every break. There are 2 ways to trade this breakout. So write this down in your notes. There are 2 ways to also trade the breakout. I gave you 2 ways to trade. Either you trade within the structure or you wait for breakout. Now, this breakout also, I'm saying there are 2 ways to also trade a breakout. 1, you can either join immediately on the breakout. You can either join on immediately on the breakout, or the second one now, you wait for a retest of the breakout, or you wait for a retest of the breakout. Now, in brackets, put this second one is very important. As an experienced trader, if you don't want to be dashing the market your money, you want a reconfirmation. That retest is just like a reconfirmation. So even when you're trading breakouts, you can avoid jumping in, and I'll tell you why. Are we still together? I feel as if I'm talking to myself. If you are together, please drop an 8.
We're together, man.
Good. So this is it. When the buyers come back to reconfirm, they're trying to grab their own advantage back. But if sellers overpower, what you see is the market will now continue to pull down. At this point, I would join here. And let me tell you the reason why I would join here. If I join here, what it means is my stop loss will just be above the zone. Because what it means is if buyers succeed in pushing back into this zone, then sellers have lost. So it means the market is no longer selling. Definitely it will hit my stop loss. Unlike if I join here, imagine if I join immediately this candle closed. Let's say this was a candle, it closed, and I'll jump in the sell, bam. What it means is this was my own entry, right? Now, the point I entered here, the market is still going for a pullback, meaning the market is buying the time I was selling. All that time I will be in loss. Now, look at, of course, my stop loss also has to be above this zone. Who is risking more? The person that entered a sell here or the person that entered here? Of course, the person who entered here is risking more, right? So that is why it's better you wait for a retest after the breakout. That way you are risking little to go and catch more. Because this person who entered a sell here would not make profits until this retest is over and the prices start pushing down, until he passes his own entry. So probably this point to here is already 50 pips. This guy has already made money at 50 pips. You are just starting your own 1 pip. So here, from here to here, this guy has made like 80. You are still on 30. Let's say the market decides to turn back from here. It's no longer going again. He can hit you out here and you still not make profits. But the guy here, even if he turns back, he has made 50 and he's good for that day. Am I making sense? If I'm making sense, put a sense on the chat box.
Sure.
Put a sense on the chat box. I like energy. I don't know why this particular, you guys, you are dulling me. And this is a class of men. You guys should be, Hey, James class, they'll be making noise. I'm not saying make noise, but then give me some energy on the chat box. Good. So that's how to trade a breakout. You want the range. This is still the best way, guys. You want a range to break out. I know it can be very difficult, waiting, but especially when the range you are looking at is like all this range on 4-hour time frame, you wait. Unlike a ranging market that has been for months, for a range that is on a monthly time frame, it's going to be a very big range. It could be over 3,000 pips. In that sign, for that kind of range, of course, you can be trading the support, the resistance inside it. If at that kind of big time frame range, you would even be seeing uptrend and downtrend inside one range, but everything is still within a range. The case study of that, if you go on gold, in fact, somebody will need to share their screen back. Okay, let me do that to save our time. Let me share my screen. I want to show you so that you also know that we have small range and big range and how you trade each two, of course, differs, right? Let me share my screen to show you an example of what I'm saying. Sorry, I love trading this way. Don't worry, you end up liking it when you're here. In fact, when I want to trade, I go as far back as monthly time frame. Sorry, too many lines. I'll remove them. You'll see clearly now. Can you see the last part of the screen? Can you see like the market is really in a range? True or true? You can see the range. This was the height. Remember those weeks? I told you weeks are part of it. So I had to put my borderline on those weeks. Let me remove this so we can focus on the range in this market. You can see this is a range on a monthly time frame. Now, what it means is for how many months now? For a long period of months. Let me put the dates. Let's see how many years this gold market has been ranging. Since all the way back from 2020. This was in first day of July 2020. This is 2 years later. We are in September, right? And this market has not passed this boundary. It has just moved from support to resistance. Now, if you are now waiting for a breakout, I said you can trade a ranging bucket either by a breakout or you buy within the range. Somebody that is waiting for this kind of breakout, what it means is this person has been waiting for the past 2 years. What it means is he won't trade for 2 years. Do you understand? Because if you look at the number of pips between 2070 to 1007, that pip, if I start calculating, this is more than 3,000 pips. What am I even saying? Plenty, more than 1718 to 1818 is already 1019. Good. Over 3,000 pips, about 4,000 pips. That's a lot of money on the table. So I won't be saying, oh, because our teacher said the best way to trade a ranging market is to wait for breakout. You are waiting for this one. You wait till Jesus comes. Because if you go on weekly, inside it, you will now see trend. If you go on weekly, you will see trend inside the same range. That's the same place I still mark. So, but can you see that inside this range, there was a downtrend? Let me highlight it for you. There was a downtrend. There was an uptrend. There's another downtrend inside the same range. So anytime you're trading a range on a bigger time frame, you can write these things down. Whenever you're trading a range on a bigger time frame, you can be buying the support and the resistance inside. Now, in this kind of range, in fact, I love this example. Look at, I won't just go and jump in the middle. Remember, I told you one of the worst places to jump in is in the middle. Don't jump in the middle. So let's say I sold from this resistance. Let's say around 1998 line. That line where you're seeing 1998 on your screen. If I sold there, the first place I want to get out. I won't be saying, hey, I want to sell all the way to 17, 18. It will take weeks or months for the market to get there, because you can see it took us 2 years. I'll first get out at the first zone. How many of you believe there is a zone around this 1908 line that I put? That's the next support after it. Why? Because if I look to the left in the past, market bought from there, market reacted from there. That's the very next zone. I'm getting out of there. This is even on a weekly time frame, so this might even take weeks, right? But because of this example, I'll get out. I won't be waiting for it to get here or this bottom, because what if you're getting here, you're waiting here, and it never gets here? Probably it gets here like it did here and did a reversal up again. Let's say you jumped in here around this 1857, and you're waiting for it to get down to this zone. And instead of getting down there, it turned back from here. You'll be in loss. That's why I said it's always better jumping at the beginning or the bottom. If you miss both, ignore. But in a big time frame like this, if you now go on a smaller time frame, because there are trend inside, you'll still be able to pick entries. Is it clear? This
Yes,
point,
it is.
don't drop anything. Just, yeah, I need
Yes,
that
it's clear.
backup confirmation.
Yes, it's
Very
clear, ma'am.
clear. Good. So trade ranging markets, 2 ways. In summary, 2 ways to trade a ranging market. You either buy the lowest support or the resistance of the range, or that's if it's in a small time frame. Okay, or you wait for a breakout. Breakouts are better also on a smaller time frame. Look at this range. The day this gold is either going to break to the downside or upside, it's going to be massive, like crazy ass sell. Because if it breaks this floor, this 1692. Hey, sorry, I'm going to share my screen again. Sorry about that. Because the day it breaks this floor, I'm trying to show the zone. You can see after that zone, this floor around 1692. Where's the next zone? Like major zone is around 1511. That's about 1,000, about 1,200 pips. Not 1,000 safe, or even 10,000 pips. I'll have to calculate often, because gold pips calculation is different from normal. If gold moves from 1692 to 1693, that's already 10 pips. 1693 to 1694, another 20 pips. So imagine all the way from 1692 to 1511. So imagine if this sold here, I know automatically that this is where we are coming to. Crazy ass money. It might take weeks because it's a weekly time frame, but there's nothing as good as knowing where the direction is headed so you can join. So I won't come and be jumping in the middle. Do you get? So that's how to trade a ranging market. Very simple. Is it hard? Was it hard?
No, it isn't.
Okay, so any question? Do you have any question on how to trade those ranging markets you saw today? Any questions so far? Or this part is still simple? We don't expect a lot of questions when we get to.
Hey, coach.
Okay.
So, okay, I think it's clear enough.
Okay.
How do you, how are you sure of the breakout? That even because even after retesting, it not still go in your direction, so that would be like a false breakout. So how do we make sure?
When we get to candlesticks, you will know about false breakouts. or how to be sure. The truth is, always have at the back of your mind, first of all, that nothing is guaranteed in this market. There's nothing like sure, right? But what is happening in the markets presently? I don't trade what I expect. No, I trade what I see. And how do you see what is happening? These candles, all these candles you see, they have a meaning, right? So when we get the candlestick patterns, you will know the ones that will let you know there was a false breakout. Like if you look at this top of this range, there were 2 times the week, a very long week, went to the top of the range. That line I put 2071. You can see 2 very long weeks. Those candles did not open with week. Those candles opened with a full body when they were opening. But when it closed with a week. That was an indication of a false breakout. After that point, before it touched that height, this was the highest. This 1998.30 line was the highest. Anybody would have thought this was the whole resistance. But the point this blue candle started going up, people say, oh, this thing has broken, it has broken, it has broken. Some people have jumped in the buy. Yes, if you were early, if you were lucky enough, you got out. But if you stayed until you got to this 2071, that anybody buying would have been in crazy loss because it reversed back with speed and closed inside. One of the ways you know is when you trade, we always tell you wait for closing of candle. When the candle closes, you will now know whether it was a false or it was not a false. And the good thing about it is, don't worry, the market always leaves you signs. You know, we are going by topic after topic, right? If we model everything together today and you know everything will be scattered. It's not organized knowledge. Do you get that? So when we get to false breakout, it's still a topic you also find out. But if you have a little bit of experience trading, I just gave you a trick. Anytime you're waiting to trade, always wait for the candle to close. Anytime frame, either 4 hours daily. Like this thing now happened on gold today. Okay, let me even go there. Good. Gold. This money actually due. Look at, can you see as if the last part, it looks as if this market is ranging, true or false? Anyone? Can you see the range of this market? It was coming down before all of a sudden, it started moving to the sideways. True or false?
True.
Good. Now, before it looks like it was in a downtrend and it broke out on 4 hours. I'm not talking on a bigger time frame. On the bigger time frame, we could still be on a downtrend. Now, this was a downtrend that it broke out of. It started moving sideways. Now, you see this last red candle, that one with a long wick at the top that went to this 728 line. Before this 728 line, this was where the zone was at. Who can say the one I'm talking about? Let me pick an arrow and highlight. This was an example of a false breakout. Can you see it? This red one, it went with the wick. This red candle was initially a blue candle because it's blue candles that push all the way up. But on 4 hours, now it gave the impression as if we're buying. Everybody thought, this range has broken. But you see, there's one thing I've come to learn in trading. When you trade, you don't want to trade 1 hour. You don't check chart on 1 hour, 8-4. You are wasting your time because you will have a lot of false breakout. So anytime you're analyzing the chart, the minimum you should have from daily. I check my charts from as far back as monthly to see the trend of the market. It was on monthly, I knew that overall this trend is a ranging market. Yes. So I'll now go to weekly. Of course, I'll teach you that when you get to trending. I'll see the weekly to see how last week closed, to know what is likely to happen this week. So on daily candle, because I'm on H4, what it means is each of this candle, it took 4 hours to form. So when this candle first opened, it was buying. But I bought also. Did I not buy? I buy. But I was targeting these edges because I know as long as this candle has not closed, it can still reverse back. So the best bet, anybody that did not want to get caught up, is you wait for the H4 closing. By the time it closed, you now see that it closed back inside the range. At this point, you would have known that any buy was invalid. But if you are jumping the buy, if you are not an experienced trader, you would have lost money. And some people would do this, like, I was buying, I made money, and then, like somebody was telling me today, I first made $130, then I ended up losing $300. Do you understand? You are here, right? The person is on this call. That's a scenario of a false breakout. So if you don't first understand how to trade it, the market will just give you money and be collecting it back.
Coach D, talk to me directly. Don't talk to me from the side. Talk to me directly.
Don't worry. We'll learn. What currency were you trading first? Let me work. What currency?
Coach D, if I say that one now, you might fight me. So it was
No.
US 30.
Just say it. It's fine.
US 30.
Okay. Okay. No. Case closed. It seems like somebody that wanted to start running, start learning how to drive. It didn't start from two. Now went to Rolls Royce. Anything can happen. The accident can be fatal. So that's how you know. So, Mr. Bola, I hope I answered. But this false breakout is a topic on its own when we get to candle patterns, reversal patterns. So you will now be able to know how to avoid false breakouts in the market. So everybody, did you get value today? Did you get value? Was this class interesting?
Yes, it was. Yes, we did.
Yeah. Okay, good. And good. Now the assignment is this. You're going to map out 5 range for me. 5 range, right? On your chart. Now you're going to tell me whether it broke to the upside or downside if the one that has broken. But if it's the range that is presently ranging, I want you to tell me how you're going to trade. So by how you're going to trade, I mean you put an horizontal line where you want to buy or where you want to sell. So you now tell me when you send the screenshot, I'll be buying at price 1.5 something. My stop loss will be whatever. And my take profit will be so zone. That's the assignment. I hope you understand.
That's fine.
Good. Now the thing about assignments is if you don't do it as they ought, you forget the assignment and even forget the topic, especially for anything you are learning for as a new person. Please, you want to go over it within the next 24 hours. So we have to tomorrow to send in our assignment. Is today Thursday or Friday? Okay,
Just Thursday.
Okay, good. So we can have a class tomorrow too. I think I'm only going to have one set tomorrow. Are we available for a class tomorrow or we
What
what
time?
Let's see. It will be around 5. Same time. So let me know if majority carry the vote. Though. If
Yes, I'm
not,
available.
you're available. Okay. What about Mr. Bolu? Is tomorrow okay by you? 5 p.m. tomorrow. Okay. Okay, great. Okay.
I mean, it's 50-50 for me. Just drop me the link. If I can come, I'll jump on it. That was not an issue.
Okay. Because the thing is, as we advance, we are now getting to topics that you cannot afford to miss. If you miss them, the foundation will be shaky. All those basic, we can miss all those ones. But as we go deeper, from next class now, we'll start from trend. And trend is a big deal. So you must understand how to trade. So, all right, ladies and gentlemen, thank you.
Thank you, Coach D.
Welcome. Bye.
Yeah, bye.